Well, Tata Steel will be the stock to look at in today's trading session. We'll be reacting to its numbers, and the numbers look quite weak. Now, on a consolidated basis, the numbers were all over the place. But if we're looking at the consolidated margins, well, that missed our estimates. We were working with estimates of closer around 5.5% to 6%. It came in at only around 2%. The good part is the net debt hasn't increased, at least. It's flat at around 1,04,000 crore rupees or thereabouts. And there was a miss on both the segments. The India business, there was weakness out there. We know the volumes are down by close to around 20% or 25% or thereabouts. But in terms of the EBITDA per ton, it missed our estimates because it came in at roughly around 6,100 rupees. This is as per what's reported by the management. And in fact, we were working with a number of closer to around 7,000 rupees per ton. Europe as well was a disappointment. Yes, we were working with an EBITDA loss of around $26 odd, but it came even worse than that. It came in at around $43, on a per ton basis. So that was very, very disappointing. Prices were weak, volumes were down. You had spreads as well out there that were under pressure. But today is the con call, and we are going to be tracking a few key points. One was Europe was bad. We need to see if it was even worse because there's a possibility that there was sale of carbon credits that's included in that EBITDA loss number. Besides that, management commentary on, the government support of the European operations, that will be another key factor. And also, more importantly, what are the realizations now in comparison to the average that we saw in the first quarter, because it's much higher. And finally, their deleveraging plans. The stock opens up in the red, but we know quarter two is going to be splendid, so there could be some buying from lower levels. We'll keep an eye out on this stock today. But as promised, then let's tell you about some macro data. Inflation has accelerated in July to around 6.9%. This is much higher than what the sheet was working with. Food prices were the main culprit out there, and that was led largely by vegetables. You had meat, fish, all of them did spike up. Lata's with us to run us through the data and also implications for the RBI and the monetary policy. Lata.
Well, it was much uglier than expected. Our poll was 6.1. There were other polls in the market at 6.2. The highest in the range I got was 5.5 to 6.5. And it's come at 6.93, as if that's not enough. Even the June number has been revised higher from 6.09 to 6.23. Now, if you take the average of the last 8 months, the average is, coming pretty close to 7%. The MPC's mandate is, under 6%, remember. And what was bad is it's across the board. Until now, you thought, okay, vegetable prices are disrupted because of transport problems. But, cereals, 6.96, meat and fish, 18.8, eggs, 8.79, milk, 6.6, oils and fats, 12.4, vegetables, 11.29, pulses, 15.92. Across the board, anything you touch is between 7 and 17% higher. As if this is not enough, core inflation, which is services, are also higher. There it is largely because transportation is higher by about 8-9%, and that's because petrol prices are added there. Something called personal services is higher because gold is added there. That thing is like 13.2% higher. So core inflation is also 5.9%. The Reserve Bank had clearly indicated in the monetary policy statement that it will not cut till it sees inflation peaking off. So the bunch of expert opinion we got is either rate cuts are completely off, they are certainly off for 2020. If that, you may get one in February, 0.25%. So clearly, bond markets will react.
Okay, all right, Lata. Thanks so much for that. Well, moving on then, the Reserve Bank of India's Central Board meet is scheduled for later today. Now, the key agenda before the board is dividend transfer to the government. The closure of annual accounts of the RBI will also be discussed. Now, the meeting starts at around 10:30 a.m. today and is expected to go on for a couple of hours till noon. Moving on then, in a move to curb widespread tax evasion, the government has proposed to widen the scope and reduce the threshold of various transactions for tax disclosure. Now, the list will now include white good purchases, property tax payment, medical and life insurance premium, and even hotel payments. Now, the tax disclosures now need to be made for educational fees above 1 lakh rupees per annum, hotel bills of more than 20,000 rupees, purchase of jewelry, white goods, paintings, marble, all above 1 lakh also needs to be disclosed. Additionally, the payment of life insurance premium above 50,000 and health insurance premium about 20,000 needs to be notified to the government. Now, filing of returns has been made compulsory for persons having bank accounts with transactions over 30 lakh and for businesses over 50 lakh turnover. So keep an eye out on this. It'll be very, very important for all of you as well. On that note, though, we'll slip into a short break. You come back, we'll have Manisha who will join us and tell us what's going on in the commodity markets. Don't go anywhere.